Hi friends, I hope this video finds you doing well. I just finished publishing my 2022 mortgage and real estate report. A little bit more information about it at the end of my video, but if you want a copy, I'm glad to send it. I'm happy to send it to you absolutely for free. All you have to do is send me your name and your email address and I'll shoot it right over to you. So I'm having a lot of conversations with future home buyers and everyone is feeling the same thing, the same pressures, and they're having conversations with other people that most likely are not in the mortgage business. And what they're sharing with me is that they do see that to buy a home today, you have to pay over list price. To buy a home today, you're dealing with a multiple bidding situation. Inventory is low, and the list goes on. And they'd prefer to buy, not right now, but soon, when the market collapses, when the economy collapses, and when mortgage rates go back down underneath 3%. And I want to share with you just a few tidbits of my 2022 report that I've published that I'm happy to send to you for free. Is I don't believe that home prices are going to collapse. I don't believe home prices are going to come down. I don't believe mortgage rates are going to come down right now. And I don't believe that the economy is going to collapse. And here's why. Keeping Current Matters came out with the chart that showcases 7 real estate pricing forecasters, all showing on average that for the remainder of 2022, real estate prices are going to continue to appreciate at over 6%. The Home Price Expectation Survey was also released, and it shows that for those that recently purchased a home at $360,000 by 2027, they're going to have over $96,000 in home equity growth. Now, if you look at the first two things that I just shared with you, and I have a few other things in the report that I've published that I'm happy to send to you, you will see that real estate and mortgage professionals, big corporations are indicating that there is not going to be a collapse in the economy. I'll also share with you that 2 years ago, we started dealing with a pandemic, which affected the entire world. Here recently, there's been the start of the Russia-Ukraine war, which we're affected by as well because Ukraine is the #1 producer of sunflower oil. They're also a big producer of neon gas, which we use, I believe, for semiconductors. And so we need that in everything. So the other thing that I'll share with you, if we dealt with a pandemic, if we are dealing with a war between Russia and Ukraine, the last thing we need to have happen right now is a collapse in housing, because we're all going to work every day. And the one thing that we all are excited and optimistic about is our homes. Or if we're currently renting, that we're going to have the ability to buy a home one day that we can call our very own. So I really believe if we look back at history, the government and the Fed has always stepped in to improve the situation at whatever cost necessary. I don't believe that in the next 6, 9, or 12 months, we're going to have a housing collapse. It would be too much for all of us nationwide to endure a pandemic, a war, and then a housing crisis. I don't see it happening. I think this is the thing that keeps us moving forward. It keeps us spending money in the economy. It just keeps us moving forward in a positive motion. Now, here are a few things that I want you to do. First and foremost, I don't want you to look at housing prices as the leading indicator as to when you should buy a home, because I've just shared with you that professionals in the marketplace that are responsible for the data that I'm sharing with you, they're not seeing housing prices come back down or the economy collapsing or mortgage rates coming down. Here's what I want to share with you. If you're in the market to buy a home, go speak with a mortgage advisor and ask them about other programs and products other than a 30-year fixed rate mortgage. Ask them about a 5/1 ARM or a 7/1 ARM or a 10/1 ARM. Have them educate you and inform you on how these adjustable rate mortgages work. They're not the adjustable rate mortgage of 2008. These are safe products and programs that we have today. The other thing that you need to do is, if you're already pre-approved, go back to your mortgage advisor and have him provide you with information on your pre-approval to confirm that you're still pre-approved for the amount you were originally pre-approved for. Because if mortgage rates are up 2.5% since the start of the year, give or take a little bit, plus or minus, then you may not be pre-approved and you're out looking for these these homes at these prices, and you may actually have to come in with more money for down payment, or you may not get the loan when you go into processing. I wanted to share with you that I've published a report, my 2022 real estate and mortgage forecast report. It has a lot more information in it. It's a few pages long. And if you want a copy of it, please feel free to message me your full name and your email address. And then, of course, I'll continue to stay in touch with you on a weekly, ongoing basis. But the report is free. My name is Edgar De Jesus. I happen to be the branch manager and mortgage advisor of Treasure Coast Home Loans. I would love the opportunity to serve you and your family with a pre-approval, with information around these new mortgage products coming to market currently and in the near future. If you have any questions, please let me know. I want to thank you for taking time out of your day to watch my video, and make it a great day.